Hey traders, John Howell here. Today, I want to share something when it comes to the stock market. I think the market's too far away from what I believe is now getting into very, very overbought territories. But also, when it comes to that topic there's a bit of a discussion or something that happened recently with someone else when it comes to saying, basically, they didn't believe in what I was talking about with the technique of how to identify stocks that are overbought and oversold. And I share that with you and why it's so important to see that. Also, what I want to cover today is I want to cover the actual mining boom that I believe is that is set to happen and how you can take advantage getting in early of that mining boom. I also want to share with you guys about how utilizing the higher time frame or multiple time frames combining with a moving average can supercharge your success rate moving forward into 2024 and how to utilize that. And then also, I'm going to talk to you about how to identify false breakout patterns. There's different types of false breakout patterns that appear in the market that suck a lot of people in when they're trading the markets. And I want to share that with you today. So let's get straight into it. Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, so let's get straight into it. But firstly, what I want to start off with, with this here, right? This is a little thing I put on a PowerPoint for you guys, okay? If you guys are in the numbers, look at this here, 111. So is that a good sign, guys, for 2024? I want you to, I wrote this down earlier and I really want to go through this here. Something to think about in 2024. When we grow and change, we get better results. We get results, but going through that change and growth, it's hard and painful. It's like breaking through a glass ceiling. It's going to hurt and you're going to get cut. You realize your habits need to change, the way you're thinking is wrong, and a big reality check. Because most people think it's going to be easy, when they feel this pain, they stop and retreat. But those who say, yep, change is hard, it's painful, and it's not meant to be easy, and this uncomfortable feeling is normal part of me going to another level. So don't stop. Don't quit. You're on your way. You're building momentum and you're closer to your dreams than you think. Just like the water well, you pump water and nothing comes out for a while. But when you don't stop, after a while, it flows in abundance. And I want to start off with that because we're getting almost to the end of this year. And we're going to start 2024 this year. And I really want to drive home that if you've had a tough year this year, I'm going to get into the techniques in just a minute, but if you had a tough year this year, guys, please don't quit, okay? Please don't quit. Don't keep doing the same thing over and over again because that's insanity, but don't quit. Get some help, right? Get some coaching. If you resonate with me, reach out to me. I'm happy to help you out, right? If there's someone else out there, but just go get some help, okay? And look at the reality of the situation. Hopefully some things that I'm going to share with you in today's update can really help you, but please do not quit, okay? You can do this. You just got to be self-accountable. It's like, then I need, obviously, exactly what I said here. You realize your habits need to change. The way you're thinking is wrong, and you get a big reality check. Maybe some of you guys are like that when trading the markets this year. Okay, there's been certain times this year where I've had that. Now, like certain trades, okay? Certain trades that I've traded in, and it's been a big reality check and so on and so forth, okay? When it comes down to your trading there. So just keep that in mind, okay? Because the thing is, becoming good at trading, it's difficult, right? It does take a bit of time. It's our thinking and unfortunately the way we think about trading is completely wrong as well too. So I hope that helps you out through there. Let's go look at the markets here. But I want to, with the actual stock market, we are still in a very overbought territory here. Very, very, very overbought. And I've talked about this a few times in my updates, and I've talked about how when we get too far away from the moving average, that it tells us that it's probably not a good time to go long, right? Now, trading is all about probability, right? There's no certainties and things can keep going. And the reason why I bring this up is because on my community tab, if you go to my community tab at the top, let me just go back to here. So if you actually go to this community tab, I've actually got this community, so obviously on my page, you go to this community tab through here. And if you scroll down to here, I said, traders, a simple tool I use is a 52 moving average on charts. If it gets too far away from it, it tells us that the move is likely to come to an end soon, right? That move. Please keep this in mind with the indexes right now. And so I put this chart up here. And let me see can I zoom in this? Can I zoom in a bit more? Okay, so this wasn't a chart of right now. This is more like a chart of just saying, you know what? Here's an example of what happens when we just get too far away from the moving average. And again, traders, trading is all about probability, right? We want to do whatever we can to really stack the odds on our side of having a successful trade and a successful trading career. I don't want you to be a one and done type of person. I don't want you to be the person that makes $1 million because you got lucky and then end up losing it all. Make sense? So I'm all about teaching you probability techniques. So I said, big key here, remember, when the market gets too far with the moving average, it's telling us that the market is overbought or oversold, just using one moving average. And this is the reason why I like to use the moving average and not the indicators. Okay, so if we have a look at this here, on this, now this is not a chart of right now, this is just a chart, it's just anything. And I was demonstrating that obviously you can see when we get too far away, it gives you a warning bell that, okay, even when we get up through to here, and even maybe through here, yes, the market can keep doing this, right? Yes, the market can just keep going up like this. We know that. But when we're talking about the probability, if you look at that as say out of 10 times, maybe 1 or 2 of them keep going like that. But then the other 8 times, guess what happens? They start to do what? They start to do either this and come back down and let the moving average start to catch back up. Or we just go sideways for a while and then we can let the moving average catch back up. And the reason why I'm talking about this here and talking about this is because there was a person here. He said, what market are you looking at? This is any market. And a big key, right, that no matter what market you're looking at, they all operate the same way. Like all markets are the same way, right? If you look at a Forex market, a crypto market, a futures market, soybeans, right, commodities, stocks, guess what they all make highs and lows. They all trend, like, you know what I'm saying? So when you start to really apply the analysis, and that's what I teach in my free trading course, second link in the description there. When you start to apply simple analysis to the markets, it's all markets operate the same way. And so this guy said this tool is BS as it never predicts it what far away is. It could go further and further. Think about it, and if you understand, you'll become a much better trader. And so this person here obviously doesn't understand about probability, right? It's yes, it can keep going further, and that's what I was saying here, and that's what through here. So it's not about saying go short. It's about saying if you're looking for a long setup through here, history tells you that you have probably a 80 to 90% probability of getting in at the top, not at a turning point for another move. Makes sense? And so that's all this is when it comes to the moving average, is it says it's too far away. So now it's all about probability. And so that's the very first thing that I really wanted to talk about through there when it comes to that, is really keep that in mind. Now looking at the actual mining, the mining sector, we can see here from a technical level basis, we're squeezing up, right? Low, higher, low, higher, low, and we're squeezing up. So this actually could start to go through a bit of a breakout to the upside. From a short-term technical level basis, this is probably going to go through to the upside. So, and the next level of resistance around the mining sector is around $44. Okay, so this is a bit of a short-term TA on the mining sector. The great mining boom, the great coming mining boom. So that's the short term, but the long term, I want you to be thinking about this. Everyone wants to try to get in, right? It's so important to try to capitalize trends before they happen. Make sense? And so think about this here. When it comes to the great mining boom ahead, if you think about the crypto market, what did the crypto market do? Right? Even when the crypto market had its first boom and then first bust, guess what happened? It went quiet for a couple of years, didn't it? So those people, when it comes to even the Bitcoin market, and let me actually just show you this here. If I go to the Bitcoin market, and I'll show you what I'm talking about here, because this is more like longer term. If you're trying to capitalize on some really longer term stuff, then this is, oh wow, look what's happening on the 15-minute chart right now. I won't get into that right now, but private clients, if you're watching this right now, if you trade the crypto market, maybe the next couple of days, it could be a nice, good trade. Anyway, so let me bring up the weekly chart and the daily charts. Actually, I'll just bring up the weekly charts. Look what happened. So when we had the first boom and bust, guess what happened? We went sideways. And so people knew that there was going to be another boom, but they didn't know when. Guess what they were doing over a couple of year period here? Guess what they're doing? They'll start to accumulate, right? They're starting to buy, they're getting in because they knew over the next couple of years, guess what's coming? We're going to get a boom. They just didn't know when. This is the key, right? This is the big key to understanding what I'm saying here. I'm trying to get you in early to what's likely to happen over the next couple of years. And it's just simple common sense when you think about it. So what I'm talking about here is the mining sector. And the reason why I'm talking about the mining sector is if you think about this from a common sense point of view, okay? The mining sector, if you're looking to capitalize on the next great boom ahead, what is that going to be when it comes to massive probability? It's probably going to be the mining sector. Why? Let's look at this here. Let me ask you a question. Do you think we're ever going to go through another mining boom in our history, in our lives again? Yes or no? The answer is yes, right? We always go through mining booms. What happens in the mining sector? What happens with all sectors? They go through booms, they go through bust, they go through quiet times, they go through booms, they go through bust, right? So we know that that's the cycle. Now, question for you. When was the last mining boom we had? Because everything's been what? Cryptos, AI stocks, and the stock market. So when was the last mining boom? Probably 2010, 2011. If you go and have a look at the weekly charts. Yeah, so it was actually 2009 to 2010. You can see through here. All that through there. And so that great mining boom, guess what's been happening for the last 10 years? So we had a great mining boom, and now we've done what for 10 years? We've basically just done nothing. So what do you think is coming over the next 10 years? If you said, okay, John, I want to put my money somewhere where I believe I'm going to capitalize. I don't know. I'm not trying to pick a bottom because that's not what investing is all about. I'm not trying to pick a bottom, but I'm going to get into a position that I don't really care what happens, over the next couple of months or next say year or two. I'm just really confident that actually I'm pretty certain that we are going to go through another mining boom again. And when that happens, guess what's going to happen to the mining sector? I'm looking at the GDXJ here. Guess what's going to happen to the mining sector? It's going to do what? This. It's actually really common sense, right? We went through a mining boom here. They went through a bust. Now we've done nothing for 10 years. Guess what's coming soon? And so if you're looking at all the markets out there, right? Because for me, traders, I'm looking at all markets. I'm looking at the commodity markets. I trade. So I invest, but also I trade the Forex, futures stocks, and so on and so forth, when it comes to an actual trading. Now, trading the markets is all about pattern recognition. That first link in the description there, guys, I'm running a webinar. On that webinar, if you join me today, I'm running it today. On that webinar, I will teach you my number one trading pattern I look for to trade for income. But that's not what I'm talking about here. I'm talking about here, position yourself for the next great boom ahead. And that is what? That is likely to be when, now obviously you've got all these other markets out there. Yes, we could go through another crypto boom and all that sort of stuff. But what is the unloved child right now? It's the mining sector. And if I'm going to put big money into the markets, and I want a massive probability that I'm going to do really well from that position. And so therefore, I want to identify these levels or these markets that are going to give me a high probability of doing that. And so therefore, to me, it's actually common sense that we're going to go through another mining boom in our life, right? Where it's just cycles, it's just history, it's common sense. Last mining boom was 2010 into 2013. As you can see, for the last 10 years, we've done nothing. Guess what's coming real soon? Another mining boom. See how it's really, really common? So people trying to get in on the next crypto boom and the next they're trying to pick the next best stock and all this sort of stuff. Why make it complicated? If you're looking for longer term stuff, then guess what? For my long-term investing portfolio, guess where I'm already in right now? The mining sector. Why? Now, traders, I'm not talking about individual mining stocks. Now, they may or may not. Okay. You need to do your homework and so on and so forth from that for me. But I'm just talking about the overall general basis when it comes to probably the indexes, the indices, GDXJ, and obviously some of the big stocks as well too from there. Makes sense? So that's the overall mining sector from there. When it comes to the individual stocks, you just got to do your own analysis from there. For me personally, I'm not that good at picking companies. Right? I don't know balance sheets and P ratios, and I don't know. That's too complicated for me. I'm just like, okay, well, the mining sector is probably going to go through a boom in the next 10 years. Let me just put money into the actual mining index. Therefore, I'm pretty sure that if they go through a mining boom, the index is going to do pretty well. Makes sense? So that's as far as I go from there. And so just apply some common sense, traders. And if you put a bit of money in, guess what? Maybe a 10 or 50 grand or 100 grand, that could possibly turn into a few $1,000,000 by the end of this year, because you got in early, just like people did in Bitcoin before it actually went from what? 1,000 or 10,000 up to 60,000. Makes sense? So I hope that makes sense from there when it comes to the great mining boom, the great coming mining boom from there. Now, let me actually talk to you about now. I've got a couple more things here. One thing I want to talk to you about and share with you is using multiple time frames when it comes to your trading to really help you and really give you the odds on your side from here. And so let's do this here. So I'm going to bring up any market. Let's bring up, say, the Nasdaq. It doesn't matter. And I'm going to bring up two different, right now I'm looking at one chart. I'm looking at one chart when it comes to the 52 moving average, right? So I like to use this on the daily charts. And you remember what I said before at the start, okay? So at the start, I talked to you about it's all about probability. If we start to get too far away from it, it doesn't mean we're not going to keep going in that direction, either up or down. It's just all about, I just want to give you the best chances of having a successful trade and a successful trading career, right? That's all it is. And so let's actually look at this here. So what I like to do is when I'm trading the stock market or when I'm trading any market, I really like to look at two different time frames. I like to look at the time frame I'm trading off. So for example, on the stock market, and I'm going to bring this up through to here. For example, on the stock market, my preferences for trading the stock market is the daily charts. I like to get in on the daily charts. But I'm also keeping an eye on the next time frame up, which is the weekly chart. So this here is the daily chart. This here is the weekly chart. On the weekly chart, I like to use simple trend analysis, but also to keep it really simple, I like to use, this here is a 24 moving average. On my daily charts, I like to use a 52 to gauge what I just said to you a minute ago about overbought, oversold level, so on and so forth. But when it comes to giving me an overall probability of having a successful trade, I want to make sure that I'm trading with long-term strong momentum, right? Long-term strong momentum. So even though we may be going through this period through here, is this likely to be a top in the market, or is it likely to be something else? Or is it just likely to be a bit of a short-term pullback before we go through here? And so what I'm trying to do is I'm trying to identify opportunities that I can get in and go with long-term momentum, right? Because trading is all about trying to cut my losses short. So when I get it wrong, I want to get out fast for a small loss. And then when the trade is profitable, I want to hold on as much as possible and ride that next big wave. Where does the next big wave come from? It comes from trading. Make sure you're utilizing the higher time frame, which is the weekly chart. So the daily chart for my entry setup. And again, I teach you when you actually learn the actual trading setup, guys, I teach you on my webinar, that first thing in the description, I'll teach you that. But because I'm not going to get into step-by-step details here, but I'm trying to teach you here that whenever you're trading, if ever you get a strong moving average, remember if the moving average is like this, it's flat, right? So that means there is flat momentum. But as you can see here from the Nasdaq, look at this here. Look at all that strong momentum, and then guess what? Then it started flattening out, didn't it? Now look what happened. Every time we end up getting a pullback, now this is a weekly chart, so that might have been a month or two. This is probably a good couple of months. As it was going sideways, what was the moving average still doing? So let me actually just blow this. Let me actually see, there we go. All right. So I'm just going to blow this weekly chart up here now. See what the moving average, look at this here. Every time we've got a pullback, look how strong the moving average through there. Strong. Look how strong it is, right? And even on the downside, look how strong it is through there. Strong through here. And then now look what happened just recently. So if I just bring this up, let me just blow this up through here. So recently what happened? On the Nasdaq and a lot of the other indices, even though we had this overall pullback through here, Guess what that was? That was that point through there. Where was the moving average pointing? Where was the moving average trending at that time? That is the moving average there. Where was it going? It was going what? Up, wasn't it? It was trending up. So even though we're going through this pullback or this drop on the downside, the longer term momentum was saying that this could be short-lived. This could just be a short-term little pullback or short-term little drop in the market before the longer term momentum picks it back up and takes it for another move to the upside. So trading, to give you the best chances of having a really successful trading career, I've always found that if you ever get a strong longer term moving average on the weekly chart, trading the stock market weekly and daily. Now this is weekly daily. Whenever I'm trading, say, the Forex or the futures or some of the smaller charts like a 1 minute chart, 2 minute chart, 5 minute chart, I'm looking to enter in off those different time frames. Then this time frame here would be the 15 minute chart. 15 minute chart with the 24, 5, 2, and obviously 1 is my entry time frame. So the 15 is what? I'm utilizing trend analysis, which is the higher lows for trends. But also I'm utilizing where is the moving average, because we have a strong moving average. What the strong moving average does for me is it tells me not to go against this, not try to go short right now, because there is a very longer term momentum that could scoot this back up again. And so I'll give you an example of a trade that I recently did on the stock market, right? So I'll give you a real life example of how this applies to the market here. AMWD. And so this is a trade that actually me and my private clients actually took. And so I think some of my private clients are still in this here. So look at this here. So even though we had all this sideways period through here and nothing was going on, what was happening on the longer term chart? This weekly chart over to the left over here, what was happening? Even though we went sideways, which is what? This sideways period through here, what was happening to the moving average? See how strong that moving average is? It's just going strong to the upside. What happened? We got a breakout and then we went for a very nice move to the upside. What made that happen? And how could you use this for your trading? Firstly, trying to go short here would be risky. Why? Because that moving average is strong trend to the upside. So very, very, very risky, very low probability, right? Because there's strong momentum to the upside. You don't want to be trying to go short. In fact, flip it on its head and say, I want to go with overall momentum. I want to go with long-term momentum because it's going to give me the best chance of having a successful trade. So me and my private clients on this breakaway bar, we got in as it was breaking out. Why? And why was this a successful trade? It was a successful trade because guess what? We're trading with the longer term momentum. And as you can see, this is so powerful. These are the simple analysis that if I'm trading the commodity price, if I'm trading gold, oil, Forex, some of the futures, Nasdaq, S&P 500, the E-mini, or I'm trading stocks, I'm applying the same analysis all across the markets. And as you can see, how am I applying this? I'm applying it using, how am I using this? I'm utilizing just one moving average on these time frames. Notice I'm not overcomplicating it with all the stochastics and the MACDs and so forth. I used to do that. But as you can see, right, we don't have to overcomplicate it. We can really simplify it just by removing all the indicators and just saying have one moving average. We can start to apply some simple analysis to get a really massive probability of not only having a successful trade and a successful trading career, but utilizing this stuff. Like for example, if it's too far away from the 52 on the daily charts, if you trade the daily charts, that's probably not a good time to get in. Why? Because even just like here, when we get too far away, we're probably going to come back for a bit because we've used a lot of energy through here, and we're probably going to come back towards the moving average before we get going again. And again, I'm talking about this on the weekly chart, but that's the daily charts. It's the same thing for the moving averages. But even through here, right? So trying to buy the bottom through here on this particular stock or any market when the moving average is doing that, guess what? Very, very risky. Wait for at least the moving average to flatten out and start to pick back up again. And then guess what? Maybe try to buy it through here because the things are starting to change the tune. So I hope that really helps you out there. Once again, I really want to set you up for 2024 to have an amazing and incredible year. And this is what I really am trying to go through with you here and share with you here, that utilizing one moving average, again, a 24 simple moving average on a weekly chart. If you trade the daily charts, I always like to use the high time frame above. and if we have a strong moving average going up, remember, this is the market. When the moving average does that, look, it's very like strong to the upside. But if it does something like this, guess what? It's pretty flat, right? Pretty flat. It's going up, but it's flat. This is flat. This is strong. This is strong. Why was this a successful trade? And I think some of my clients are still in this right now as they've moved their stop up to protect their profits. Guess what? It was why? Because I utilized one simple technique. I traded with strong trend, which is simply just what? Low, higher low, and another higher low. So strong trend, strong higher lows, which means just higher lows. Strong trend and utilizing the moving average, which is strong momentum. If you can utilize those two things on the weekly charts and then try to look for some good entry points on the daily charts with what I just said there, massive, 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 massive probability in the markets. So I hope that really helps you out there, guys. Again, these updates here are really about trying to really help you and serve you and support you to make sure you're utilizing these tools. There's all traders through my last 20 years. I've learned so much from being part of these markets that this is just the iceberg of what I do. With my private clients, I'm with them every day. So I'm talking about this sort of stuff all the time with them to really help them get ahead in the markets and obviously when we trade the markets as well too. So I want to talk to you about different false breakout patterns that can happen in the markets here. So let me bring this over here for a minute. Okay, so I want to talk about different false breakout patterns from here. And so I really want to talk about this here because there's a lot of times when the markets, when you might get, oh, it's breaking out, and it's likely to go for a run, but guess what? It's a false breakout. And there's a few different types of false breakout patterns that I really want you to be alert from. The first breakout pattern is when the market, and this is an example of a Forex chart, when the market has done what? Actually, you can see it through here, right? So look at this here. What is this here? This is what? The 52 moving average. Right here, are we quite far away from the moving average? We are, aren't we? That's where, firstly, I always like to get into trades when the market's pulled back to the moving average first, and then I'm looking for an opportunity. But why did this fail? It failed for two reasons, right? This breakout bar, people were sucked in. How could you identify this being a false breakout? Firstly, we've been going down for a long time. And what ends up happening to the market is that a lot of times the market might go down a little bit, down. It'll get a little pullback through here and then it'll go down like that. That is a 90% probability of being a sucker rally or a sucker drop, a false breakout. Why? Because think about the market as an energy resource. Okay, so as I'm doing this recording for you right now, I went to the gym. Right, I went to the gym and I was at the gym for about an hour and I finished and I was exhausted, tired, right? So think about this as a gym thing. Whenever the market's going up or down, not sideways, whenever the market's going up or down, think about that as you going to the gym and you having a gym workout. If it's been going down for a while, down. Right, let me do this. I'll change this color from here. So if the market's been going down, and the market's dropping, but you're using a lot of energy, right? You're selling it off and you're working, training hard, and you're training hard, and you're training. This also works for the upside as well too. So whenever the market's going up or down, you're using energy. It's an energy resource. Now, there are other technical terms I can use this, like what's called price and time and stuff like that, but I'm not going to get too complicated. I'm trying to utilize simple terms for you so you can really understand, this has actually used a lot of energy. So therefore now, because we used a lot of energy, guess what? Now we need a bit of a break, right? We need actually a good break to refuel. But if you've done all this energy and then suddenly you just get like a little pullback, hang on a minute, or a little rest, that's like you going to the gym for an hour, having a 5-minute rest. Yeah, you've had a 5-minute rest, but you've just kicked your ass for an hour. Are you ready to go for another big hour session? Probably not, right? You might be ready to go for another 5 or 10 minutes of hard workout for a while, and you're like, oh man, I've just used the last little bit of energy in my tank. I'm exhausted. And then guess what? You end up coming back through here. You end up refueling, and then maybe it gets going again, right? And so utilize this as an example, because this is exactly what it is, right? Look at this here. You're using energy. You're at the gym. It's going down. We had a little move through here. That's all the rest you had from this big workout. No wonder this didn't work out through here. And on top of that, what I just said, they're utilizing the energy resource, what I just mentioned there, which is the market's like an energy resource. And when you see the market, and that's where like with the indices right now, as I'm doing this recording, the indices right now have been using what? Using so much energy that people are starting to get sucked in, just like that comment that I mentioned to you at the start of the video, right? And now look what's happening through here. So now what's likely to be inevitably going to happen, just like the indices, we're inevitably going to start to get a bit of a pullback, or at least a sideways phase for a while, to just what? To just rest and get ready for another move again, potentially. So that's that point through there. And also you can see through here as well too. Look at this here. Another example of what I talked about. Look at all this big move up, and then we had this little pullback, and then we had this big breakaway bar. Why did this completely fail the very next day? Same thing, right? Look, it had all this move through here and then a pullback. Now, to keep it really simple, whenever I'm worried about have we had enough rest or not, I always say the best type of trades are when we get the sideways movement, but we get the sideways movement to what? To the moving average. So this moving average through here like this, I always say that have we had enough rest to go for another move in this market or not? And the simple answer to me is that have we had a period where the market's gone sideways, or it's had a bit of a drop for a while to come back to the moving average and then maybe continue this upward trend like this, or it may be something like that's the moving average coming through there, right? We end up getting a pullback. We end up going sideways through here for a bit like this, and then we continue this overall trend to the upside. Make sense? And then if we utilize this one through here, there's a 52 moving average and a shorter term moving average. Why did this breakout fail? See how the exact same thing. I'm utilizing a couple of different examples for you to show you what to look out for in the market. Look at this here. Look at all that move to the upside, and then look at that there. So you did all this work out here, all this training, and then you did all that training for an hour at the gym, and now you've had a couple of minute break, and you're ready to get and you want to go for another big 1 hour workout. Not going to happen, right? Because what's going to happen after of the next 5 or 10 minutes? Last little push, and then you're tired. Then you're going to do something like this. Then the market's going to come back to the moving average, and then it needs what? Then we need a bit more now resting phase before we can get going again. Why did that trade on the trade that I talked about here, when it comes to the trade that me and my clients, why did this work out so well? Was this a successful trade? Two reasons. One, what I talked about on the higher time frame, which is the weekly charts, utilizing the trend and utilizing the overall moving average. But also, secondly, what happened here? Look at this. We also waited for what? I also waited for the market to pull back towards the moving average to tell me what? We've now had a really good resting phase from this move up. And now because it's pulled back to there, we're getting ready to have what? Another move to the upside. We're getting ready for that next acceleration phase. Okay, now I've had a bit of rest. Let's go back to the gym. Okay. And so I hope this helps you out there today, traders. I've gone through actually a lot of stuff. I really, really, really do want you to have a really successful 2024. And my update here is just utilizing a whole bunch of different techniques and tools to really help you out with that. Now, when it comes down to actual trading system, traders, that first link in the description, I want you to join my next webinar, because on that webinar, I'm going to teach you the first thing I'm going to teach you is how I actually went from $250,000 in debt to making really good income in the markets. So I can show you exactly what is the mindset, what is the framework to actually breaking out of that pattern if you've done that this year. And then also, secondly, what I want to teach you is I'm going to teach you when it comes to the techniques I've talked about here, I'm going to wrap it all in one simple, powerful trading system. And I'm going to teach you step by step exactly what that system is and what the pattern is. I'm going to teach you for free. And then also I'm going to teach you how to actually scan the markets, so scan thousands of stocks, so you can actually find those trades as well too. And also how you apply it to the futures markets and so on and so forth. So if you really want to have a good 2024, then that first link in the description there, guys, or go to johnslivetraining.com. I'm running that webinar today. And you can go over there right now, register for it. Have an amazing day, traders, and I'll look forward to speaking to you in the next update.